Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, coming to you this week a little bit differently than we have in recent weeks. We wanted to give a little bit of insight, kind of behind the scenes on what we do in preparation for our weekly videos, but then also in preparation for our client communication in regards to where we feel the market will have some direction moving forward. So we wanted to give a little bit of kind of quote unquote chart school this week, in addition to our normal weekly video on what we do to try to prep for the week. So the first thing we do is any chart that you see in front of you, albeit from us or from anyone, you want to orientate yourself to exactly what is the time frame and what information is being shown in front of you to help you orientate yourself to the overall chart to be able to kind of decipher the information that's being presented to you. So in that light, we want to highlight the tools that we use are from TD Ameritrade, and the specific tool in front of you is called Thinkorswim. And we use this tool, have been using it for many, many, many years, so we're very used to it. But at the same time, it provides us inordinate amount of information in regards to the free tools that they provide. Now, I'm not an affiliate with TD Ameritrade. This is 100% our tool that we recommend to any client that works with us. So with that, I want to just orientate you to the chart. So first and foremost, you want to see what product that you're looking at to make a determination. And here in the upper left-hand corner, I want to call your attention to the ticker symbol. So we always start off our videos and our analysis with the broader market, and we look at the S&P 500, and a good representation of the S&P 500 is the main exchange traded fund, SPY. So we start off with the ticker, then secondarily, you also want to look here in the upper left is determine what time frame are we looking at. So we're looking at a 3-year monthly chart. So what does that mean? That means that the time frame that we're looking at for the entire width of the chart is approximately 3 years of information. In addition, each one of the candlesticks that are shown in front of you represents 1 month of price action. And here is our current month. And you can kind of see here that there is some type of trend that we have been able to identify. Obviously, the market has been very, very bullish over the last 10, 12 years or so. However, over the last few months, we've been in a relatively consistent trading range where prices really hasn't moved that much. As we zoom in just a little bit, we can kind of see here that price really hasn't moved that much over the time frame. So that helps us make some determinations on what could potentially take place moving forward. So as we begin to kind of narrow things down, I want to look for some consistent patterns. For example, the majority of 2016, almost every month, we were in a clear bullish trend upward, but then coming into 2017, 18, and now 2019, we've kind of had some up and down type of price action that really hasn't had us been able to create some type of consistency. But we're looking at, well, what is the potential trend that can kind of carry forward for us moving into the future? So one of the things that we always tell any type of person that works with us, albeit just casually or formally, you want to look backwards to be able to try to create a hypothesis that will bring you forwards. And that's all technical analysis is looking backwards and trying to identify areas of repetitive type patterns that will help you predict what could take place in the future. So as we begin our analysis, we start off with, well, what has taken place in the past and what is the broader trend? And we typically will start off with a 3-year monthly chart and take a look at, well, what has taken place over the last number of years, but then we'll begin to narrow that down to a 1-year weekly chart. Again, you want to orientate yourself with any type of tool exactly what chart is being shown in front of you, as you see here in the upper left-hand corner. So as we showed previously, we have had some type of pretty much consistent price action, as I call it, a little push and a pull from the bulls and the bears over the last month. And that's a clear indication to us that the market does not have any type of very definitive direction, as prices have been kind of oscillating up and down in this highlighted range here. You can kind of see and I'll call it out just with a little bit of lines, that price action has come to the top of the range and has kind of moved down, rolled up to the top of the range and has rolled down a little bit, and is now slowly but surely trying to test all-time highs. Now, will it make all-time highs? Who knows? But we're beginning to narrow down the hypothesis, and at the same time, we begin to look at trying to identify, are there some particular trends that are coming to fruition? They're just kind of standing out to us. So remember in high school, and some of us even in elementary school, when we began to identify what does it take to create a straight line. A straight line is made up of two individual points. Now, almost all of us thought we would never ever use that information again, but in the technical analysis realm, trend lines are your number one friend in regards to identifying, well, where are there areas of support and where are there areas of resistance? And we take a trend line tool to be able to identify an area where their price action has seen some type of ceiling. So as a good example here, roughly about the $302 level, over the last number of weeks, we've been able to identify that price has hit a ceiling where price has not been able to kind of break through this area to be able to increase overall. Now, we've seen this a number of times, and it does create a certain type of level of probability that if price does continue upward, it may see some type of resistance. But at the same time, we have seen this pretty consistent trend line of being very, very bullish. So prices are now beginning to kind of converge and compress into a very, very tight range. And we do identify this as a potential opportunity, but does also create a certain level of uncertainty on where price could go as we approach this new level. So it could continue up very bullishly, or it could come touch this line and reverse right back downward, or conversely, it could come down and be able to test this line and continue downwards, but then also test and then return right back upwards. So that probably sounds very confusing, but you want to be able to identify, well, what is the probability of this happening given what's happened in the past? Now, a way to do that is to determine, well, hey, who's in control of the auction? So as we start off with our monthly charts, our weekly charts, and now we'll move down into a daily chart just to be able to, and I'll shift the scale just a little bit, just to be able to see, well, what's happened on a shorter time frame. We don't necessarily recommend that you become some type of day trader. Obviously, that has a certain type of negative connotations to it. But at the same time, you need to be able to look at multiple time frames to come up with your hypothesis. And you still can see here that we do have a very strong bullish trend that has continued to return up back to the prices that we've seen before. Obviously, as we noted, we've kind of called out this box area, if you will, where prices just kind of oscillated back and forth. And that's a good sign that the market has determined some type of equilibrium, because the whole goal of the overall market is to provide a mechanism or a system where people that are bullish and where people are bearish come together and come up with some type of equilibrium price so that goods and services can be exchanged. That's the whole purpose of the market. Now, when you see prices kind of continuing inside some type of balance or some type of trading range, you know that those prices are very, very much fair, because there's not only just the exchanges of goods and services, but there's a large amount of volume that is taking place in that regard as well. So we'll do another video on volume, but we do want to just kind of highlight some of the things that we do take a look at as we begin to do our analysis. Now, one of the final things that we do, once we've identified some type of trend, we've identified some support and resistance, and we'll call out the resistance here, roughly around the $281. Actually, we'll just take this as a trend line, as a channel, and it'll mark it out pretty clearly. And this can show you pretty specifically on how tight we have been over the last month and a half or so in regards to an overall trading range. But at the same time, we've identified kind of some highs and lows, not only both from a resistance perspective here, but also as a support toward the bottom part of this range. So we'll call out our resistance level here, and we'll call out our support level here. Now, this red horizontal line it's going through is exactly 50% of that overall range. Now, one of the mathematical aspects that kind of come into the overall market is that the market likes certain types of ratios, and you can kind of make the inference, that if you're bullish and you've purchased down here and someone is bearish and they've purchased here at the top of the range, well, where can they meet in the middle where they can kind of have this 300 movie type collision? And that's roughly at the 50% mark. And you can see that in some instances here in the middle of the range, roughly around the middle of August, you saw this equilibrium right at that 50% level. So that's an indication or a clue that this level can have some type of support and resistance as a potential profit target, not only for the bulls to be able to exit out of a position, but then also for the bears to exit out of a position as well. So that is an area that we do look to kind of call out as some type of equilibrium. And it's just something that we just kind of carry forward to highlight a opportunity for us to potentially exit or enter a particular trade, no matter what type of equity. Now, the final piece that we do is stepping into taking a look at our volume profile. So we'll take a second and we'll move over to the volume profile. So as we shift over to the volume profile, I want to just take a quick second to orientate ourselves here. And this is one of the key tools that we use to be able to create a hypothesis on what will take place moving forward in our overall price action. Now, as always, we'll call out certain levels and certain areas. Now, I could do a whole series and probably will do a whole series on volume profile, but just kind of give you a quick primer. So in our charts, obviously this looks very, very busy, but as I orientate you, it will become very, very simple. In addition, the more times that you look at it, it'll become very, very evident. And this is one of the most simplistic tools or indicators that can kind of help you make some decisions in regards to the overall market. Now, the first thing that we'll call your attention to is a couple of key lines. First and foremost, this purple line here at the top, and then kind of this purple line here at the bottom. This first purple line here at the top is what we call the value area high, and here at the bottom we call this value area low. So what does that mean? So we call out both a high level and a low level where the majority of volume over a time frame has taken place. So over the last 3 years, the majority of the volume for the S&P 500 exchange traded fund has taken place between the price levels of 297 and 245. Over the last 3 years, the majority of the volume has taken place in those particular areas, which is a indication for us to be able to make some types of decisions in regards to, well, what could take place moving forward. Very clearly here at the top of the range, we are butting up to those prices, and at the same time, we've seen some pretty good rejection over the last 3 months or so, where we have seen price not able to get above that $297 amount. So at beginning the compression, as we talked about in the front side of the video, you can very much see this in regards to this very, very little volume that's taking place at the top side of the range. So what does that mean? That means that the bulls are exiting certain positions at the top in anticipation that price will not continue up higher. Secondarily, the bears have stepped in with the hypothesis that, hey, price is not going to continue much, much higher, and I think there's value much, much lower, and we're going to sell. Now, at some point, someone is going to be proven right or someone's going to be proven wrong. Now, historically, the more times you knock on a door, you're going to get someone's attention. So think about price just hitting this ceiling, hitting this ceiling, hitting this ceiling. Eventually, it'll break through. Now, you don't know exactly when and where that will take place, but you do know that it will happen at some point. And that's the predictability of volume profile. They can actually kind of indicate potentially when and certainly where price can be determined as being fair or unfair. Now, here in the middle of the range, you see here in the middle of the range, this red or kind of cranberry type color. Now, this is what we call the point of control. And what is the point of control? The point of control is the largest amount of volume that has taken place at a particular price. So roughly about $267 over the last 3 years has been the fairest price, meaning where bulls and bears have gotten together and said, hey, this is a perfect price for both of us. We can agree. Let's exchange shares back and forth. So this becomes very, very important for us because now we can determine, well, what is a fair price? That's one of the first questions that almost anyone will ask when they get into the stock market is, when should I buy? When should I sell? Well, there's no exact determination for that, but volume profile does kind of give some type of indication that, hey, are you getting a particular equity or a particular commodity or a particular stock that, or option, excuse me, that showcases where, hey, here's where the most volume has taken place. So this is a high probability of it being a fair price. So not only volume area high, telling you that, hey, this is a very high price and the majority of volume took place beneath this price, right? Think of it as buying soda or buying something from the grocery store. Do you want to buy it on sale or do you want to pay over full price? If you're buying something that is above value area high, it is much, much more expensive. Now, if you buy something that is below value area low, it is very, very inexpensive or relatively cheap in comparison to historical prices. Now, here right in the middle is where we have identified an area where we feel that price is very, very fair. And that's what we call the point of control. In this example, in the S&P 500, you see us butting up very, very aggressively over the last 4 months in this particular example, where we have not been able to get prices with some type of sustainability above this 297 area, and very much specifically have not been able to breach above its all-time high at 302. Now, at the same time, we are much, much higher than the fairer price. So there begins to be a little bit more uncertainty. Well, hey, are we paying too much for this particular product? And that's where we begin to have this equilibrium as the larger institutions begin to separate out where they are looking to kind of de-lever or de-risk because prices have become more expensive and there isn't that necessarily very, very strong momentum to push it much higher. So that's something that we look at, obviously looking at multiple time frames, but then also looking at the volume profile. So this is a monthly chart, as we've indicated previously. So we'll take the same level of information and we'll kind of mark out some levels very quickly. We will just do this. We'll say value area high on the monthly. Can't type today. And just to kind of call that out, and we'll shift over to our weekly chart in a little bit. So we'll call this as value area low on the monthly. And we'll do the same thing as for the point of control. We will do this as a POC on the monthly. And you'll see why we do this as we shift over to the weekly chart really quickly, is these levels now will kind of pop out to you to be able to determine, hey, the longer term time frame where the institutions are making greater decisions versus kind of an intermediate time frame on the weekly, where we present this to you every week in that regard, is do these lines kind of match up? Now, on the value area high, you're very, very close to that level. So roughly that 297 level that we identified from the monthly chart is very, very key, as it's relatively close to the value area high level, roughly about $300 on the weekly chart. So you know that there's some type of confluence. That's why prices had a very difficult ability to get above, because we have confluence for the longer term players as well as the intermediate term players. Now, conversely, as we see here at the bottom, we see our point of control is significantly lower than where it was on, significantly higher from where it was on the monthly chart. So that indicates that individuals on a shorter term basis are very much willing to pay more money in the shorter term than they were to pay in the longer term in regards to price. So the volume has increased roughly about the 289 level over the last year. That has been the fairest price for the S&P 500, roughly about that $289 level. And we'll call that out very visually for you right here. And then lastly, we can see that our value area low on the monthly in correlation to the weekly is vastly different as well. So in the the shorter time frame, you see very clearly that value has increased very systematically in the last year, where individuals are willing to pay much, much higher with the hypothesis that prices will continue to go higher as they have been in this very significant bullish trend over multiple years. So as we give these examples, hopefully you can kind of see where you can kind of come up with some type of hypothesis. Is the market going to go up or is the market going to go down? So what is this telling me? This is telling me that the market wants to go higher, right? So overall, 98% of the time, equities move higher in price over time. But when they do go down in price, they go down very aggressively. That roughly 2, maybe even 3% of the time that the market does go down, it goes go down very aggressively. So what it's telling me is the market wants to go in this direction, but it's having a very difficult time to do that. And one of the things that we want to kind of plant in everyone's mind is you want to identify what is the market doing, right? The market is currently doing nothing. It's going back and forth. And some of that is due to some US based news as well as some macroeconomic news. But then the other question you want to ask yourself is, what is the market trying to do? The market is clearly trying to increase in price because it has come to that level of $297, roughly $300 range multiple times, and it's having a difficulty doing it. And that's the last question that you ask yourself is, how good of a job is it trying to move forward? It's doing a not so good job, but there still is a little bit of momentum in this clearly bullish direction. So as we move forward, well, what do we feel is going to happen? And that's the keyest thing is you don't know, right? Moving and looking to the right or the right-hand edge, as individuals in the industry call it, is you have no idea what's going to take place, but you're looking backwards to try to create some hypothesis. So all things being told, it's a relatively 50-50 shot right now because prices are knocking on this door, knocking on this ceiling to try to break through, but they're not doing a good job of breaking through this level as it's been clearly some type of resistance over a number of weeks over the past year. But what happens when someone keeps knocking on your door? Eventually you're going to answer it and prices will continue to move upward. But at the same time, if you knock on the door and no one's home, well, what happens? Price will eventually look to turn around and come back down into a specific direction. So let's walk through that. Well, this is how we can use volume profile to help us be able to determine a particular direction given a hypothesis. So let's go through an example of what if price cannot break through this barrier? Well, the first location that we will look at is where is the point of control in correlation to where price is today. So if you're going to sell short, meaning that you want prices to go downward, where is the first location that you would probably look to target on top of support and resistance? Would be the point of control, where you know there's going to be someone willing to purchase because that's happened multiple times, given just a clear definition of what the point of control is, meaning that it's the highest volume where prices were deemed to be fair for both the bulls and the bears over the entire time frame. So we don't want to get into a full detail on volume profile, but just something that we look at over a very consistent basis. And then finally, before we come up with our true hypothesis, we just take a look at the daily time frame after we've marked out very high levels where we, as an example, what we did on the monthly chart, we identified the value area high, the value area low, and the point of control. We would do the same thing on the weekly chart, and obviously those things would see some type of convergence, but then also some type of divergence, and then do that finally on the daily chart to identify where are there some opportunities for overlap, where we can particularly look at opportunities to either enter a trade or exit a trade. So sounds really complex, but it's really not. Everyone was a student at some point, including myself, and I don't claim to be a super expert. And my job is just to give you the information to help decrease your fears, to empower you to step into the stock market as one of the key ways to help create generational wealth. And with that, we'll leave you. And as always, thank you for your time and thank you for your information. And at the same time, please remember it's your money and it should be under your control.